All right, let's get right into it. Something really interesting is happening with gold. It's 2025, and gold isn't really acting like a commodity anymore. Honestly, it's acting more like a signal, a huge flashing warning light coming from deep inside the global financial system. So the big question we have to ask is, what's changed? Why is this ancient asset all of a sudden sending out a message that, frankly, most of the world hasn't quite figured out yet? We're going to unpack that signal because it is pointing toward a massive, massive repricing event. And believe me, that signal is getting louder. Gold recently just blew right past its all-time high, hitting $4,380 an ounce. Now, this wasn't just some small jump. This was a statement. But the really fascinating part is that this isn't just about market speculation. Yeah, that's the whole idea right here. The price itself is the message. It's not just random market noise. It's telling us that something really fundamental is shifting under the surface of our entire financial world. So let's dig in and see what that signal is actually saying. Okay, so part one. The first piece of this message is really about the health of the system itself. Look, it's not collapsing tomorrow, but it is definitely creaking, and it's loud enough that the people in charge can't ignore it. And here are those pressure points. You've got global debt that has soared past an almost unimaginable $330 trillion. Just think about that number. At the very same time, confidence in the world's main reserve asset, the US dollar, is slowly but surely starting to wear thin. This is the background for everything else we're about to talk about. And who do you think is the first to react when they hear these systemic creaks? Well, it's the central bankers themselves. They're not just sitting on the sidelines watching, they are acting. And they're doing it with a level of conviction we haven't seen in a very, very long time. Just look at this chart. The demand from central banks over just the last 5 years has absolutely dwarfed previous periods. We are literally witnessing the fastest pace of official gold buying in over half a century. So the crucial question becomes, who exactly is leading this charge? Well, the buyers are global, and they're strategic. You've got countries like China, India, Poland, and Turkey, each of them adding over 200 tons. And it's not just the giants either. You see countries like Singapore, Japan, Hungary. They're all making really significant moves. This is a coordinated, worldwide shift. And this is the key. You have to understand this is not just simple portfolio rebalancing, moving some assets around. This is fortification. Central banks are buying gold because they know it's the ultimate insurance policy for when debt gets out of control and trust in paper currencies just evaporates. Now, all of this massive buying is also driving a pretty profound geographic shift. The long-held dominance of the West in the gold market, it's pretty much over. The center of gravity has officially moved east. And here's exactly why that's happening. Every time assets get frozen or sanctions are imposed, it sends a crystal clear message. Any wealth you hold in Western financial systems can basically be turned off like a light switch. Physical gold, on the other hand, well, it has none of those problems. You can't sanction it, you can't freeze it, and it has zero counterparty risk. For Eastern nations, this isn't just a nice feature, it's an absolute necessity. Just follow the money. Look at what the biggest players are doing. When a firm like JP Morgan, the world's largest gold dealer, moves its entire trading desk from New York and London all the way to Singapore, that is not a minor tweak. That is a loud and clear admission that the center of the gold universe is now in Asia. And the scale of this power shift is just staggering. Did you know that Indian households and institutions alone are estimated to control 40,000 tons of gold? To put that in perspective, that's more than the official reserves of the United States, all of Europe, China, and the IMF combined. This acts as a massive invisible price floor for the entire market. Hey, just a quick pause here. If you're finding this useful and want to keep up with what's happening, please take a second to like, share, and subscribe. That way you won't miss out on any of our future updates. Thanks. So, okay, we've got this historic coordinated demand on one side. But now we have to look at the other side of the equation, which is where this incredible demand runs headfirst into a problem that's pretty much unsolvable, the supply squeeze. This is where the real drama is. It's a fundamental conflict. On one side, you've got this exploding demand from central banks, ETFs, people buying physical bars and coins. But on the other side, global mine production has been totally flat for 15 years. There have been no major new discoveries. This is the perfect recipe for a structural bull market. And just when you thought demand couldn't possibly get any higher, A whole new player enters the game: tokenized gold. This is the potential to turn gold from just a store of value into programmable, spendable money for the digital age. This opens up a use case that the metal has literally never had before. So, we've got the signal, we've got the buyers, and we've got the squeeze. Now we get to the final piece of the puzzle, the catalyst that's set to light the fuse and unleash all of this pent-up pressure. If you zoom out and look at the big picture, gold has been in this massive 50-year-long consolidation pattern ever since the US left the gold standard back in '71. After it bottomed out in 2015, it spent nearly a decade basically coiling up like a spring, just absorbing demand and compressing. And it looks like 2025 is shaping up to be the year that spring finally releases. And there's a classic rule in the markets that totally applies here. The longer a market coils and builds up energy in a tight range, the more explosive the eventual move is. Well, after nearly a decade, this thing is at maximum tension. So what's the spark? It's this three-step sequence. First, the Federal Reserve has officially ended quantitative tightening, which stops the flow of liquidity out of the system. The next step everyone's predicting is a return to massive quantitative easing. We're talking huge amounts of money printing to rescue a system that's basically drowning in its own debt. And when you combine a decade of coiled-up pressure with the catalyst of renewed massive money printing, the result isn't a slow, gradual climb. No, the conditions are set for a sudden and potentially violent repricing. Now, based on how gold has moved in the past under similar economic stress, especially if you look at the 1970s, these are the kinds of potential targets we could be looking at. And look, these aren't just fantasy numbers pulled out of thin air. This is what the math looks like when a decade of compressed pressure gets released all at once. So, all of this leaves us with one final big question to think about. For over a century, the world has run on a system of paper promises, really, backed by a little more than confidence. The rise of gold right now feels like a powerful wake-up call, a reminder of what real, timeless, and indestructible value actually looks like.